In this video, I will be going over the notion of high probability trades, where and how to find them, as well as a live trade example. As always, make sure to like and subscribe for more. So what do we actually mean by high probability trades? Well, in actual fact, there's no such thing as a high probability trade, but there is such a thing as a higher probability trade and a lower probability trade. And what I mean by this is, in an uncertain market, we can't be so certain about a trade idea or trade setup being of high probability or of being of low probability, but we can be certain of something being of higher probability than another trade and a trade being of lower probability than another trade. And that's why we need to adjust our mindset from thinking about trade setups in terms of probabilities. Now, once we've got that under control and we understand that every trade has a probability of success and a probability of failure, and a higher probability trade has a higher probability of success and a lower probability trade has a lower probability of success, then we can move forward with looking at what we want to look for in terms of trades that tend to be high probability trades. So when we are looking for higher probability trades, we ideally want to take trades like this. So when price is trending to the downside, we want to be sellers in this market. We want to be catching trades on the pullback and entering short. So essentially what we will be looking for is breaks of structure like that confirm that we're going to the downside, and we want to be trying to sell in this market. So we want to be sellers in this market. And the reason why this is of higher probability is because if price is trending to the downside, you have the natural force of the market pushing the pair you're trading to the downside, which means that you have an additional confluence. You have trend on your side. And when you have trend on your side, you'll see that your trades tend to work out a lot better. Now, if you have been collecting data and journaling all the trades you've been taking, I can almost guarantee for a good majority of you that trades you've taken with trend tend to work out, and trades that you don't take with trend, so reversal type trades, are the trades that are letting you down. The opposite is also true for a market that is moving to the upside. So we want to be looking for breaks of structure to confirm we are truly trending up, and then we want to be buyers in this market. So essentially it's actually very easy. Now, if we put this to practice into a more of a reliable theoretical example, let's say price is trending down, okay? So price is trending down on the lower time frames, and then we tap into a POI, and then we reverse to the upside, okay? Then we start to trend to the upside, then we tap into a POI over here, break structure, and then we're moving down. Now, where are the higher probability trades? So if price is trending, obviously this is not really the best type of what I've drawn over here, but if price is trending to the downside, then at this point here, a high probability trade is going to come in around here, okay? Because price is trending to the downside, so any of these ones. So you want to be short in this market. At this point, we don't care what happens to the market here and here, because price is reversing. Let price reverse and show you its hand in terms of where it's trying to go. Now, what I meant by this point is, well, price is reversing here, so we must have, let's say, a higher time frame POI here, okay? And if price is reversing here, there must be some sort of POI or something here that price is tapped into. Now, we don't care what happens at this POI. We don't have to care, because if we trade with trend and we trade for higher probability trades, then all we care is what happens here. So if price reverses from here and starts to give us bullish order flow, we'll be looking for buys up until this point, okay? So this would be an area we will be looking to take a trade in. Now, price comes here, it reverses, okay? Gives us our entry drill for reversal. We don't take that trade because we know it is of lower probability, or not lower probability, but as in compared to a trend trade, it is of lower probability. And we wait for price to show us bearish order flow, and we get some bearish order flow, and then we take shorts around here into this area in case price reacts from here again. But obviously we can have runners to go and continue further down, so further down to like here somewhere. if price continues down. And now that's essentially all we need to look for in terms of higher probability trades. We look for trades where price is trending. This can be done on any time frame. Obviously, it will take a lot longer for you to take trades, and it'll be less frequent on the daily time frame, on the 4 hour time frame, on the 1 hour time frame, compared to the lower time frames like the 15 minute, the 5 minute, the 3 minute, or the 1 minute. But these are the locations ideally you want to be taking trades. Now if I zoom in to the trend a little bit more, so let me remove this. So let's say we have a trend going down like this. Now what we want to be doing is we want to be sellers over here in the market. Don't try and buy this area. We don't want to be buyers here because these are high risk. We want to be selling at this point here. And our ideal setup, it will come in the form of something like this. So we have our downtrend, and we have our, let's say, our order block in here, and we will take our short position over here, stops around there just above the order block, and we will target, whatever you want to target. So let's say our target is this point here. This obviously would be the bullish case in terms of buys at lows over here, stops just below, and we're targeting highs. And then if price looks like it's going to continue, we can have longer targets as well. So now that we know what we want to look for and where we want to look for it, let's go into a live trade example. So this is actually a trade that I was looking to take today, but for some reason my MetaTrader 5 did not trigger me in the position, actually instead cancelled the position, which was really very strange. But let's start off by marking out some structural points. Okay, so we come to the charts. This is on the 1 minute time frame. The reason why we're doing it on the 1 minute time frame is because on the 3 minute and 5 minute, as we can see, this is the Asia range just before London session, and price is actually moving up quite impulsively. And now when this happens, from backtesting, I've learned that we can take advantage of some 1 minute structure. If I start marking out this 1 minute structure, we have a high, then we get the breaker structure, then price pulls higher, we get another high, a breaker structure, price is pulling higher, and then what we're looking for is we are looking for price to come back and pull into an order block that causes a breaker structure. Okay, so if you don't know about order blocks, then I would recommend you watch that video. I'll put the link up, or I'll put a tag up in the top right hand corner of this video to refer you to that video as well. But this is what we're doing. We're just following price action. We're following the trend, and price comes back at this point. And as we can see, I guess if you put your order here, you just get missed at this point. Oh, okay, here we go. We've tapped in, and now let's say if we had our order here, stops would be just below. So let's just put it at 1.2. And our targets, let's go for a 1 to 5, and you can see that that target gets met. What you'll see is when we take trend trades, because we expect the trend to continue upwards, we can see here we get another breaker structure. So what we're looking for, we're looking for price to come back and tap in to the order block that caused the breaker structure, which will be this one. So let's remove this one. Let's go into here. Oh, wrong one. I like to use the GAN box tool, just so it shows me the 50% of that box as well, of the order block. And we can put an order around here, stops again. Now in this case, I'll put the stops maybe about 1.5, just to accommodate some of this wick as well. Let's see what happens. Okay, so this price comes really close to violating our order block, and then pushes up, and there we go. So it's come back a couple times, and then we get our completed trade. So as we can see, all we've done in this case is we've just followed structure. So where is price going? So we have our breaker structure there, price comes back. As we can see, we actually get an extra trade here. There was another opportunity to jump into this trade around this point here. So if you jumped in here again, that could have been a scale in trade. Jump in here, stops just below, and then price rallies away from there. So as we can see, higher probability trades come when price is trending. So if you can find where price is trending on any time frame, you could look for order blocks that are valid and take those trades, and you can see you would make very good return on your capital that you've risked. Unfortunately, that's it for today's video. Make sure to like and subscribe, and I'll see you in the next one.